Good afternoon. Jason Woodard here with Health Wealth Agency. And today I wanted to talk a little bit about 5 reasons why your work policy isn't enough. Okay. Every week, the agents, we kick off the week with a discussion. And this message could be for clients and agents. It's just a little education piece. But the topic of discussion this past week on Monday was, why do some clients feel like work coverage is enough? So what I want to do is kind of start off by telling you a little story, okay? There's a company, 3M. Everybody knows them. They make I think somewhere in a drawer here, little sticky tabs. You stick them up somewhere, okay? 3M's a huge company, okay? Made a lot of money. They're doing well. But companies make decisions that affect us on a daily basis all the time. And it doesn't matter whether you're paying money into a policy through work or not, that company controls that policy, so therefore they can make some changes. So the people that work for 3M, literally retirees lost half of their benefits packages, meaning they cut them in half to reduce expenses. So that could be your retirement money, a pension, that could be your life insurance. Specifically, I know through research, the life insurance division, what they were doing for those people, the benefits packages they had, they literally got cut in half. So how does that affect you and why is that scary? Well, the 5 reasons why your work policy isn't enough and what you need to think about is a couple things. Okay, one, they're non-portable. Okay, the one thing I like to point out to people is that times have changed. Nobody works for the same company for 30 years anymore. When we first, my generation, right, I'm 39, we first remembered we were all told the same thing, right? Go to school, get a degree, get the job, work for 30 years, retire, everything's going to be great, have kids, get married, life's good, right? And unfortunately, that's not the case anymore. In fact, if you want to increase your salary, a lot of times you have to shop around and you might find yourself jumping from job to job, okay? Taking better offers. The companies don't typically reward you for tenure anymore like they used to, okay? So you see a lot of people not even staying at their job. So if you're not staying at your job, that policy is not really going to follow you to the new job, and therefore it's not as beneficial to you, okay? Now, why is that is reason number 2, okay? It's not portable because of reason number 2, which is ownership, okay? Like 3M, the company decides what happens and how to deal with your policy because they own it. So if you have a private policy and it says owner, unless you give express permission, nobody else can call and make changes on your policy, right? So if the company owns it, you could wake up one day and just find out, hey, I don't even have coverage anymore, or it's cut in half, okay? You want to be in control of your own policy, okay? The third is how they're set up. Okay, most of these work policies are set up for income protection. Okay, and what income protection means is they're designed to cover 2 to 3 years of expenses. Okay, not like most proper life policies. Okay, most proper life policies, if you look at DIME method, debt, income, mortgage, expenses, maybe a few extra things you're worried about, you're going to find that most people are looking to leave, 7 to 10 years of income for their family if they were to just, drop dead unexpectedly, get into a car accident, a million things that could happen, okay? Income protection for only 2 to 3 years, that's kind of like, hey, if I pass away, it covers the family for a couple of years, but it's not going to take care of them for the long run. So a private policy is going to bridge that gap between what your work policy covers and the reality that, you have a 30-year mortgage, you have kids, you have a wife, you have all these things. 2 years of coverage isn't going to be enough, okay? Now, there are restrictions. These are group policies, right? So it doesn't matter whether you're contributing, whether it's a non-contributory policy. Either way, it's a group policy, and typically you won't receive all the extras and benefits that you would receive in a normal policy. Some of those benefits can include child riders. Some of those policy benefits can include living benefits, which has become a huge thing for people now because the majority of us don't die in accidents, really. We die from a heart attack, stroke, cancer, or the worst thing is we have to live with it. So either we die too young or we have to live sick, which increases our expenses, and therefore living benefits allowing us to accelerate our death benefit and use it for those things can be very helpful. But you won't have those options on a group policy through work. Okay, and number 5 is rate increases. rates can change every 5 to 7 years through a work policy. Okay, so save more by getting a policy that won't change, right? And I'm going to do another video in the future about the transitional phase of life. But there is a time where you want to be in one vehicle over another just due to the time in your life, and we'll get back on that. So here's a big question. Should you have a work policy? And the answer is yes. Anytime somebody wants to give you something very cheap, $7 a month, $11 a month, get it, right? Should you have additional private coverage? Absolutely. Listen, you're the youngest you're ever going to be. You're the healthiest you're ever going to be. Why wait until you find yourself in a position where you've either lost coverage has been eliminated, you no longer work at the company, or you just realize, hey, I got that thing when I was like 25, and now I'm 45, and I need a lot more coverage. I have a lot more assets and a lot more people depending on me. And I want to be able to get that policy at a rate that I can afford, or at least is a lot cheaper. I remember getting $1 million policy for only $66 a month in my mid-20s, whereas now it would cost me hundreds of dollars a month, right? So timing is a big key. So keep those 5 things in mind, guys. Number 1, you can't take it with you most of the time. You will run across a couple. I'll say most of the time. 2, you don't even own the policy. It's designed for a couple years of income protection. Most of your family is going to need a lot more than that. You do have restrictions and lack of benefits that you'd be able to receive in a private policy. And the rate increases are going to hit you about every 5 to 7 years. And as you get older, you're not going to want to deal with that either, okay? So I hope that's a great message for you guys. That's 5 reasons why your work policy isn't enough and why you should reach out to an agent today and look at your options for private policies based on your own personal needs. Have a great day, guys.